Welcome back to the exchange. Stocks are looking to close out the week on a down note. The Dow shedding another 400 points today, still trying to hold on to a 0.5% gain since Monday, while the S&P and Nasdaq are on pace for their worst week since April. The Russell 2000s, which had been up sharply on a big winning streak as investors rotate into value, also lower. But my next guest sees plenty of upside still. Joining me now is Sandy Villere, partner and portfolio manager at Villere Company, or should I say St. Denis. How do you write that on forms, Sandy? St. Denis, Villere the third.
It gets complicated, especially if you're flying on a day like today. It always gets confusing.
That's right. You're trying to change flights after a 9-hour wait. It's one of the best names ever. Okay, on to the task at hand, which is for you to convince me that this small cap rally is for real and not just a 1 week thing or a juiced up election thing or a head fake.
Yeah, I mean, when you go, I think when investors were going into 2024, nobody really knew, is this a recessionary environment? And I think people thought inflation was going to be a lot more stubborn. And then you get the 3.4% inflation print in April, and then it comes down 3.3 in May, and then you got the 3% print in June. And I think at that point, a rate cut in September was a bit of a foregone conclusion. Small caps do not do well going into a recession, but they do extremely well coming out of one. In fact, once the Fed cuts, going back over the last 75 years, small cap has outperformed large by about 11%. So if you look, even year to date, it was one of the widest margins in history where large had outperformed small by 13.5%. That's already narrowed to about 7.5%. I think that narrows further, and I think 2025 small caps continue to outperform.
So what do you say to those who go, no, this, or maybe the move's already done, right? That I've seen the charts that show we're kind of mean reversion. We were way at extremes, and now we're back on track for more like ho-hum. And what about the fact that earnings, by the way, this is a great stat from the other day, Russell 2000 earnings did not grow at all between 2021 and 2024.
Yeah, I mean, so when you look at earnings, about 25% of the Russell is in biotech and financials, and so you didn't get a lot of earnings growth. But you look forward to next year, and you're talking about 17-18% growth, and also look at the valuation on the Russell 2000 trades about 14.5 times earnings versus the S&P 500 around 25 times. So I think as investors start to dust off their small cap file, they realize that this is a whole sector that's been just left for dead. And there's a lot of opportunities when you sort of dig through it.
Those opportunities you're even finding in banks, some other types of things. I mean, banks, I think, are especially a concern for people. They don't want to pick the one that's going to end up having commercial real estate problems kind of come to fruition and take them down. So do you have to do your homework, or do you think the valuations are safe enough that a broad swath of them can work?
I think you could buy the KRE or an index and get good exposure to regional banks in particular. We tend to take more of a rifle shot and try to find those individual banks that are, just very solid franchises with good core deposits, et cetera. So that's kind of how we take it.
All right. You've also got OP Option Care, the largest provider of home infusion services, private clinics as well. A lot of businesses people know once they start to comb through them or might be familiar with. Sandy, for now, thanks so much. We appreciate your time.
Thanks, Kelly.
Sandy Villere, Villere & Co.